Welcome to the deep dive. Today we're taking a close look at a staking platform called PolkDao. That's PolkDao.pro. It's been getting attention for promising some pretty high returns.
Right.
We've gone through the source material, including a detailed video review, to try and figure out, well, is this a legitimate high-yield platform on Polygon? Or are we looking at something else? Maybe a Ponzi scheme?
Yeah, PolkDao markets itself as this great opportunity, for staking its own token, Key.
Yeah.
It definitely targets people looking for quick income.
Which is exactly why we need to scrutinize it.
Exactly. We need to see how it actually works, not just what they claim.
Okay, so let's start with their main pitch. It sounds quite technical, potentially appealing. They talk about a self-sustaining, deflationary system. Poke tokens, they say, are only minted through staking. And the key part, they supposedly burn 100% whenever they're sold.
The idea being it rewards long-term holders, keeps the price up.
That's the narrative.
But that mechanism, well, that's where you have to look really closely. A token burn only helps the price if enough new money is coming in, like people buying Poke with other established crypto.
Right, needs fuel.
Totally. If that inflow, that recruitment slows down, the burn rate doesn't really matter much anymore. There's just no demand. It's built on needing constant growth, which, well,
never ends well.
It's usually unsustainable, yeah.
And that fragility, it seems pretty clear when you look at some basic checks from the source material, like that Scam Advisor report.
Yeah.
It called the platform legit.
Right, but then
immediately flag new indicators which might point to a scam. I mean, that's just weirdly contradictory.
It is really confusing, and honestly, that confusion is just the start of the red flags. The big one for me, total anonymity.
Yes. No idea who's behind it.
None. Zero information about the creators, the developers, nothing on the website.
Yeah.
That's classic rug pull territory, where the creators just vanish with everyone's money.
Drain the liquidity and poof, gone. And then you combine that anonymity with how new the platform is. The domain, PolkDao.pro, it was privately registered September 9th, 2025.
Right.
The review we looked at was from early October 2025. So the platform was, what, weeks old?
Barely. A brand new site, no known team asking for your crypto. It's not a good look.
Yeah.
And this is where the PUAO token history gets really strange, too. The source material mentioned PO was worth almost 3 cents back in December 2024.
Whoa, December 2024. But the platform only launched in September 2025.
Exactly. So who was behind that token for the 9 months before the platform even existed? And why is it now, less than a year later, worth only a penny?
Despite that supposed deflationary burn.
Right. That massive drop in value just screams instability. Something isn't adding up.
So if the token's already tanking, what's keeping it afloat? What's the actual model here?
Well, it seems pretty clear from the sources. These kinds of projects almost always rely heavily on network marketing. Recruitment.
Getting more people in.
Yeah. They push users to swap their, Bitcoin or Ether for these low-value Poke tokens. Then it's all about bringing in new recruits to keep the money flowing to pay the earlier investors.
Classic pyramid structure, basically.
It really resembles that structure, yes. And that reliance is the telltale sign. Once recruitment dries up, and it always does,
Then what?
then the selling pressure just crushes any burn mechanism. The platform either tanks completely or the anonymous team pulls the rug. Either way, most people end up holding a worthless bag of tokens they can't sell.
So the reviewer's conclusion was pretty harsh then.
Very blunt. Too many red flags, the anonymity, the new domain, the dodgy token history. It looks structurally like another Ponzi.
Okay, so let's bring this back to you, the listener, trying to navigate this DeFi space. We've laid out the data, anonymous team, brand new platform, a token that's already lost most of its value, reliance on recruitment.
All significant risks.
Significant risks. But the initial hook is still those substantial rewards. So the crucial question is, how do you personally weigh that temptation, that potential upside, against these really obvious documented risks of losing everything?
Yeah, making that calculation correctly, that's absolutely vital. If you want to survive, let alone thrive in crypto right now, it's all about risk assessment.